And it's like, okay, people start selling plexus, okay? Well, what do you know about nutrition? And what do you know about medicines? Are you a pharmacist? Are you a nutritionist? No. You're somebody with a high school education who got sick of being a waitress, and then you started telling everybody that they can buy plexus and it will solve everything from impotence to cancer. And yet not one shred of evidence that it works. Except these testimonials from people who say it helped them. Okay? And then people who buy Bitcoin, who do not have a clue what cryptocurrencies are and how they're valued. But it goes up, and that's the proof that they are smart. The fact that it went up is the proof. And I see it all the time. Now be careful about people jumping in. Okay? Man, I've met several people in the investment world, in the financial advisor world, and it always just chills me to the bone. The last time was at a wedding reception. I sat next to a guy and he had this real poofy hair. You know what I'm talking about? I'm talking about the Baptist or the Church of Christ preacher hair, you know? And we started talking, and I said, so what do you do? He said, well, I was a preacher for 30 years, and now I'm a financial advisor. Great background. You know, he passed that Series 7 or the other licensing exams, and that makes him qualified. Good luck with that. All right. Let's see. Okay, so this tells you what the regulators are looking at when they regulate these finance companies. So, this is much like insurance regulation, where you look at the contracts, the loan agreements, okay? And what are the terms of those loan agreements? And what are the interest rates that these companies charge? Because typically, these are kind of last-ditch type companies. And, you know, if people are borrowing from them, it's because they couldn't get a loan from a traditional bank, okay? And then, how do they go about repossessing property? So that's for people who aren't current on their loan, okay? And you hear horror stories about people getting called and employers getting called, so-and-so owes us money, you know, people losing their job because they borrowed money, okay? All right, so Dodd-Frank jumped in here and closed the loopholes. Be careful borrowing money from these payday lenders and all these specialty finance companies. Do they serve a purpose? Yes, they do. They do serve a purpose. Okay? But just be really careful, because you're a high risk, you're a subprime, and they're going to loan you the money, but the terms are not going to be good. All right. Okay. SEC regulates these mutual funds, like I said, with money market funds. Okay. So they have to register, be approved, and they have to submit financial reports. Everybody has to get a prospectus that nobody reads. It's kind of like the agreement that you accept the terms and agreements. You click on yes, I do. You will read a line of it. Okay. And so the investor is supposed to understand the financial condition of the mutual fund company, the recent performance of the company, the objectives of each fund. What is it that they do, this particular fund? Most people only look at one thing when they put money in a mutual fund. What is it? How'd you do last year? Okay. I tell you, in the investments class, I'll repeat it here. Several years ago, I was called in by a hospital to talk to their staff. Talked to about 500 people about how to invest their 403B. one lady said at the end, she raised her hand, she was in her mid-60s, and she said, well, what do I do with my 403B? I lost 50% of it last year. I said, what did you invest in? Well, that biotech fund. I said, why did you invest in the biotech fund? Well, it was up 75% the previous year. Okay. The problem with that is the hospital exposed themselves to huge liability by allowing that woman, that person, doesn't matter what gender that person is, to do that without advising that person. Now, if she said, oh, I was advised, they told me that it was highly risky, and I went ahead anyway and put more than half of my retirement savings, and I wanted to retire in 2 years, in there. They did warn me. Okay, probably not. I think they had warned her adequately. She never went down that. All right. Security brokers and dealers, combination of state and federal supervision. Okay. So brokers trade securities. Okay. And investment banks underwrite securities, which means they buy the securities for their own account, and then they trade. Okay. And then there are people that don't do any trading, they give financial advice. And that's why I am. Okay. I'm a registered investment advisor. Okay. So I don't advise people on, well, it's time to sell 100 shares of Walmart and buy 50 shares of Amazon. That is not what I do. Okay? I did some of that for about 25 to 26 years. I used to write research reports, and I would advise people on what to buy and sell. But for the vast majority of people, that is a loser's game, big time. So that's not how I work it. All right. So the SEC is the big dog here in this world. Okay. And again, the SEC's been around since 1939, 1940, and they didn't stop what happened in 2009. They didn't stop it. Okay. And they lost a lot of their base. A lot of their investment banks went belly up. And there's a group called FINRA, which is a voluntary association of brokers and dealers and investment firms, investment banks, and they self-regulate. Why do they do that? To keep the federal government off their backs, that's why. So if you charge a fee based on the assets that you manage, then you're regulated by the SEC primarily. If you charge a commission based on a product that you sell, like a stock, bond, or mutual fund, then you're regulated by FINRA primarily. All right. Hedge funds, private equity funds, venture capital companies. Okay. High risk. And you know, hedge funds, that term is very misleading. What does the word hedge mean? You know? Protect. Protect, right? Protect from what? Risk. Loss. Okay? So you see that and you go, oh man, they're less risky. The problem is that the strategies that are pursued under this banner of hedge funds, oh man, it's all over the map. And it ranges from trying to lock in a guaranteed rate of return to taking an ungodly amount of risk with derivatives. Okay? And so you have to really understand what it is they're doing. And these people employ the smartest mathematicians on the planet to pursue their strategies. There's no way you're going to understand what they do. And as we'll find out in just a moment, the amount of disclosure that they have to provide is minimal. Minimal. So they basically say, we're brilliant, and we have these strategies that no one else can do, and all of the smart money is with us, and the SEC says you have to be worth a certain amount of money and make a certain amount of money to put it with us, and you have to be willing to lose it all. That's what it is. So, very lightly regulated. It's a problem, okay? And in fact, they don't want to disclose what they do, because what they do is how they get paid. They don't want people to know what they do, and that's not evil, okay? But it's a huge bet that you make, okay? Again, The Big Short. If you haven't watched The Big Short, I urge you to watch it. There were several hedge fund managers in there, and they were all doing things a little differently, okay? But I also have to tell you, since I'm encouraging you to watch the movie, the language is filthy. I'm not a prude, but I work at Harding, so I don't want to say watch this movie and then do not watch it around anybody conservative. Don't let your mama know or your daddy know. They'll freak out about the language, and rightfully so. It's really bad. But the purpose of watching the movie isn't necessarily for entertainment as much as it is for education. Not to learn new words, okay, but to see how the industry works. That's what it is. Big Short. Christian Bale is one of the stars. All right. So the SEC kind of has broad oversight. Okay? And the mutual funds, these money managers have to disclose what they buy and sell, but it's way after the fact. Okay? So by the time you see what they've done, I mean, you're not going to profit on their trades. Okay? All right, and Dodd-Frank specifically separates these riskier investment operations. Okay? They draw big boundaries around these. If banks want to get involved in these things, then there's no way. It has to be in a bank holding company environment where a bankruptcy from a hedge fund or a private equity fund or a venture capital company doesn't endanger the commercial bank. And the problem with hedge funds is you've got derivatives involved, and so a small amount of investment could lead to a much larger loss. Okay? All right. Let's stop there. This is a long chapter. Go to 45. So I think we're behind a little bit, but we're going to catch up. Where we're going to catch up in this course, let me stop this. Peace out, shalom.